Nasdaq 100 managed to reverse 2 weeks of losses, and all three major indexes are currently moving in an upward fashion, indicating of the positive market sentiment currently. In this report, we are to discuss the financial and fundamental environment surrounding US stock markets. UBS, the European banking Goliath, reported its earnings for Q3, in which it was shown that the bank lost $785 million to cover the costs the bank incurred for its acquisition of Credit Suisse. Despite the bank's loss, the company stated that it had managed to win back clients' assets, which resulted in $22 billion in net new deposits from former Credit Suisse clients. The bank's client retention and win-back strategy appears to be working, as Credit Suisse Wealth Management's quarterly net new money turned positive for the first time in a year and a half. As a result, the positive indications by UBS that their integration of Credit Suisse has been moving smoothly, the long-term benefits and indications appear to have outweighed the greater-than-expected loss in revenue for the quarter. Hence, we may see investors' confidence growing in the Swiss bank, which in turn may allow for the share price to continue rising. Tesla has raised wages by 4% for its workers at its Berlin Gigafactory, following concerns that Germany's IG Metall labor union was on the cusp of unionization Tesla's workers. The pay increase for the roughly 11,000 workers at the German plant starting in November would also include a 1,500 bonus in December in order to offset inflation. In addition, the company will raise annual wages for workers in production by 2,500 in February 2024. The wage increases may have been a preemptive strike by the company to prevent unionization attempts and proactively avoid any blowback from the wage increases given to American auto workers. In conclusion, the higher labor costs could potentially weigh on Tesla profitability and as such weigh on the company's stock price. Should Tesla's actions be mimicked by other European car manufacturers in order to prevent discontent amongst their employees, their stock prices could also be impacted in the long run. We highlight the issue as it may prove to be pivotal for Tesla factories as well as European manufacturers. Uber, the popular ride-sharing company, posted its earnings for Q3 on Tuesday. The company reported another strong quarter for Uber as their year-on-year trip growth accelerated to 25% from 22% in Q2. The better-than-expected bookings outpaced expectation for the third quarter in a row, according to the company, yet failed to meet market revenue expectations. The company's revenue came in at $9.28 billion, which is 2.60% lower than the market expectations of $9.54 billion. Still, the potential negative effect appears to have been overshadowed by the company's optimistic growth expectations and the better-than-expected earnings per share, which beat market expectation by coming in at 0.34 per share. In conclusion, Uber's stock price following the earnings release reached levels last seen on the 7th of July 2021 and could continue its upward trajectory, should Uber's growth expectations start to materialize. The Fed's interest rate decision last week, in which the bank maintained interest rates steady, appears to have boosted the confidence of market participants, as the rhetoric following the decision indicated that the terminal may have been reached. The dovish pause combined with the lower-than-expected non-farm payrolls figure seems to have set the stage has allowed the US equities markets to strengthen. The reduced expectation of a recession in the US economy appeared to have facilitated an influx of funds from investors whose risk appetite may have increased. In conclusion, should US recession worries further subside based on the assumption that the Fed will avoid an over-tightening scenario, we may see US equities further gaining, while should the worries of a recession re-emerge, we may see funds being redirected to more safe assets. We know that the majority of high-impact earnings releases have already occurred, yet some high-profile companies are still set to report their earnings reports next week, starting with Home Depot on Tuesday, followed by JD.com on Wednesday, and closing of the week is Alibaba and Walmart on Thursday. Hence, and given also that Black Friday is nearing, we may see the market's interest rate increasing, shifting towards the US retail sector. Thank you for watching.